Engaged Capital is an activist investor that has taken a stake of about 6.6% in Shake Shack and plans to push for board changes and other improvements to boost the stock price. But what does that mean for the company and its shareholders? An activist investor is a type of shareholder that tries to influence the management and strategy of a company by using its voting power or public pressure. Engaged Capital is one of the most prominent activist investors in the U.S., with a track record of successful campaigns in companies like Hain Celestial, Rent-A-Center, and Medifast. Engaged Capital believes that Shake Shack has a lot of potential to grow its sales and profitability, but it needs to address some key issues that are holding it back. Some of these issues are the board composition. Engaged Capital thinks that the board lacks diversity and independence, and that some directors have conflicts of interest or are overcommit. It wants to nominate 3 new directors with relevant experience and expertise in the restaurant industry, corporate governance, and finance. The capital allocation. Engaged Capital argues that Shake Shack has been spending too much money on opening new stores and buying back shares, while neglecting its existing stores and digital capabilities. It wants the company to slow down its expansion, invest more in store renovations and technology, and return more cash to shareholders through dividends or buybacks. The operational efficiency. Engaged Capital claims that Shake Shack has been underperforming its peers in terms of margins, profitability, and returns on invested capital. It wants the company to improve its cost structure, menu optimization, labor productivity, and supply chain management. Engaged Capital hopes that by implementing these changes, Shake Shack can improve its financial performance, increase its competitive advantage, and enhance its shareholder value. It estimates that the stock price could reach $120 per share by 2025, compared to the current level of around $70. However, not everyone agrees with Engaged Capital's views and proposals. Some analysts and investors think that Shake Shack is doing well in a challenging environment, and that its growth strategy is sound and sustainable. They also point out that Engaged Capital's stake is relatively small, and that it may face resistance from other shareholders or the management. The outcome of this activist campaign is still uncertain, but it will likely have a significant impact on Shake Shack's future direction and performance. Whether Engaged Capital succeeds or not, it will certainly shake up Shake Shack's board. Engaged Capital is a hedge fund that owns about 10% of Shake Shack's shares. It is not happy with the way the company is run and wants to make some changes. In March, it sent a letter to the board of directors, asking for 3 seats on the board. It also proposed a new strategy for Shake Shack, focusing on improving profitability, expanding internationally, and enhancing shareholder value. Engaged Capital believes that Shake Shack has a lot of potential, but it needs better governance and more accountability. It claims that the current board is too cozy with the founder and CEO, Danny Meyer, and does not represent the interests of all shareholders. Engaged Capital says that its nominees have relevant experience in the restaurant industry and can help Shake Shack grow faster and more efficiently. It also says that it is open to constructive dialogue with the board and hopes to reach an amicable resolution. However, if the board does not respond favorably, Engaged Capital may launch a proxy fight to win shareholder support for its proposal.